My name is Batmaloshni Anna Prampan Ponasami. Today I want to explain my part, that is introduction and conclusion. This assignment includes three primary questions. The first is why I choose the companies and how they related to the hospitality, tourism and wellness industry. FN with a 140-year history has established itself as a reliable brand in Southeast Asia, known for its halal certification and extensive product choices. FNs and Nestle are closely linked to the hotel, tourist, and wellness industry throughout their goods, services, and collaboration. In terms of hospitality and tourism, FCN offers beverage and culinary products often found in hotels, restaurants, often related establishes. Products such as 100 plus tonic drinks, teas and dairy products are frequently catered to tourists and travelers. From aspect hospitality and tourists, Nestle is a major supplier of coffee such as Nescafe, bottled water, and convenience food to hotels, airlines, and resorts.
Hello, my name is Sharifatul Jasmine Beti Said Ahmad Bacha and my metric number is H23A1660. I will present about the background of the companies for Fraser and Eve Holdings Berhad and Nestle Sandrian Berhad. Fraser and Eve Holdings Berhad is a Sharia compliant food and beverage company. It generates an annual turnover of 5 billion ringgit from its beverages and dairy products. It founded in 1883, the company operates across multiple divisions and has expanded through acquisitions. Fraser and Eve Holdings Berhad employs 2,500 staffs and holds leading positions in sweetened condensed milk and evaporated milk markets in Malaysia and Thailand. The company exports to 93 countries and operates 13 certified manufacturing facilities. Nestle Sdn Berhad, established in Malaysia in 1912, is committed to excellence and integrity in halal principles. With six factories and over 5,000 workers, it manufactures over 500 halal certified products, including staples like Milo, Maggi, Nescafe, and KitKat. Nestle operates in over 186 countries with over 2,000 brands and has received multiple awards for brand strength and market achievements. The company focuses on sustainable farming, community support, and employee welfare, and is recognized for its commitment to corporate governance through the Asian Corporation Governance Scoring System.
Today, I will present a trend analysis for the company Fraser and Nerve Holding Berhad FNN from 2023 to 2022. Okay, here we can see the different current ratio increased by 9.70%. This show that the firma protect the debt better in 2023 compared to 2022, while the quick ratio also increased by 27.67%. This show that the company has better liquidity and manage its current asset and liability effectively. Next, the net working capital increased by 18.77%, indicating that the firma managed its cash flow better in 2023 compared to 2022. Okay, let's look at the activity ratio section. In the total asset turnover section, there was a decrease of 8.16% in 2023. This showed that the firma not use asset effectively in that year, while the account receivable turnover in 2023 experienced a large increase of 35.85% compared to previous year. This is because the firma collected more of this debtor in 2023 compared to 2022. Okay, let's look at the activity ratio section. In the total asset turnover section, there was a decrease of 8.16% in 2023. This showed that the firma not use asset effectively in that year, While the account receivable turnover in 2023 experienced a large increase of 35.85% compared to previous year. This is because the firma collected more of this debtor in 2023 compared to 2022. Furthermore, inventory turnover increased by 31.85% compared to the previous year. This is because the company is able to sell inventory faster, showing better inventory management. Fixed asset turnover also experienced a decrease of 18.75%. This show that the company produced a smaller income compared to the value of the fixed asset its own. And the last thing is that the amount of change in time interest earned increased by 19.43%. This shows that FNN can make loan by meeting the condition.
My name is Sharmila Raman. Today I want to talk about the trend analysis Nestle Malaysia. Current ratio is the firm is not able to satisfy its decreased current liability in both years. Then the firm is not easily comfortable to cash because inventory is lower than current ratio. Net working capital, poor management of cash flow, negative 2022 is lower than 2023. Total asset turnover about the firm used asset increase in 2022 compared to 2023. Firm collect their receivable frequently in 2022 compared to 2023. The collection is low in 2022 compared to 2023. Inventory turnover, the firm can sell the good equally in 2022 compared to 2023. The firm used its asset eventually in 2022 more than 2023. Debit ratio is high risk and may discourage investment. The firm has low risk of bankrupt in both years. Return on equity and asset, the firm was very efficient. It issues equity capital in both years and firm utilized its asset better in 2022 than 2023. Gross profit margin, the firm managed its cost of sales well in 2023 compared to 2022. Net profit margin is the firm was efficient in converting in sales into actual profit in the both year. Thank you.
Comparative analysis Nestle Mr. Berhad and Fraser and Leaf Holdings Berhad FNN in year 2022. Liquidity ratio of Nestle Mr. Berhad and Fraser and Leaf Holdings Berhad in year 2022. Current ratio. Formula current asset divide current liabilities. Interpretation Nestle ratio indicates less short-term liquidity compared to FNN. FNN show a stronger ability to cover short-term obligations. Quick ratio. Formula current asset minus inventories divide current liabilities. Interpretation Nestle low ratio indicates higher reliance on inventory to meet short-term liabilities. FNN demonstrates a healthier liquidity position with sufficient liquid asset. Net working capital formula current asset minus current liabilities. Interpretation Nestle has negative working capital indicating potential liquidity challenge. FNN positive value suggests strong liquidity and operational funding capacity. Activity ratio of Nestle Mr. Berhad and Fraser and Nif Holdings Berhad in year 2022. Definition of activity ratios. Measure efficiency in utilizing asset to generate revenue. Importance. Reflect operational performance and management efficiency. Total asset turnover formula sale divide total assets. Interpretation Nestle efficiency utilize asset to generate revenue compared to FNN. Accounts receivable turnover formula sale divide account receivable. Interpretation Nestle collect receivable faster, showing better credit management. Average collection period formula account receivable divide daily sales. Interpretation: Nestle collect receivable more quickly, demonstrating higher liquidity. Inventory turnover formula COGS divide inventory. Interpretation: Nestle has a slightly higher inventory turnover, reflecting better inventory management. Fixed asset turnover formula sale divides fixed assets. Interpretation: Nestle show better efficiency in utilizing fixed asset to generate sales. Leverage or debt ratio of Nestle Mr. Berhad and Fraser and Nif Holdings Berhad FNN in year 2022. Definition of leverage ratios: evaluate a company financial structure and ability to manage debt. Importance: reflect the financial risk and long-term solvency of a company. Debt ratio formula: total liabilities divide total assets. Interpretation: Nestle is more highly leveraged, with a greater proportion of asset financed by debt compared to FNN. FNN lower ratio suggests a more conservative financial approach. Debt to equity ratio formula: total liabilities divide common stock equity. Interpretation: Nestle has significantly higher financial leverage, indicating a greater reliance on debt than equity. FNN lower ratio reflect a stronger equity position and reduced financial risk. Times interest earn ratio formula EBIT divide interest expense. Interpretation: FNN is a stronger position to cover its interest obligations, indicating better risk management for debt repayment. Nestle ratio took lower still show excellent interest coverage ability. Profitability ratio of Nestle Mr. Berhad and Fraser and Nif Holdings Berhad in year 2022. Profitability ratio defined: measure a company's ability to generate earnings relative to revenue, assets, equity, and other financial metrics. Importance: indicate the efficiency of operation and return to shareholders. Return on equity (ROE) formula net income divide shareholder equity. Interpretation: Nestle provides significantly higher return to its shareholders, demonstrating superior equity efficiency. Return on asset (ROA) formula net income divide total assets. Interpretations: FNN outperform Nestle, indicating better utilization of asset to generate income. Gross profit margin formula gross profit divide sale. Interpretation: Nestle has a higher gross profit margin, indicating better cost management and profitability from core operations. Operating margin formula operating income divide sale. Interpretation: Nestle higher operating margin highlights stronger operational efficiency and cost control. Net profit margin formula net profit divide sale. Interpretation: Nestle demonstrate exceptional profitability, significantly outperforming FNN in net income generation relative to sale.
Hi, I'm Kritika Kaliselva. My metric number is H23A1942. I'm here to present my part of comparative analysis of Nestle Malaysia Berhad and Fraser Neef Holdings Berhad FN in year 2023. The first ratio is current ratio is under liquidity ratio. The method of current ratio is current assets divided by current liabilities. The current ratio of Nestle Malaysia Berhad in 2023 is 0.61. This reflects that Nestle Malaysia Berhad is having difficult time paying its immediate debts and liabilities. In contrast, the current ratio of Fraser and Neef Holdings Berhad FN in 2023 is 2.95, indicating that FN has strong liquidity position to cover its short-term debts. The second ratio is quick ratio. To calculate the value of quick ratio, minus inventories from current assets and divide by current liabilities. The quick ratio of Nestle Malaysia Berhad in 2023 was 0.22, indicating limited liquidity to cover short-term liabilities without relying on inventory. While Fraser and Neef Holdings Berhad FN quick ratio of 2.05 reflected strong liquidity and significant coverage for short-term obligations. The last ratio under liquidity ratio is net working capital. The method to calculate the value is current assets minus current liabilities. In 2023, Nestle Malaysia Berhad reported a net working capital of negative 831.878 million, reflecting a deficit as current liabilities exceed current assets. In contrast, FN recorded a strong positive net working capital of 1,658.5 million, with total current assets significantly surpassing current liabilities. This highlights FN's healthier liquidity position compared to Nestle's Malaysia. The first ratio under activity ratio is total assets turnover. To calculate the value of total assets turnover, we must utilize the method of sales divided by total assets. In 2023, Nestle's higher total assets turnover of 1.98 compared to FNN's holdings 0.98. Nestle's Malaysia higher turnover reflects more efficient utilization of its assets to drive revenue compared to FN holdings. The second ratio is account receivable turnover. The method to calculate the value is sales divided by account receivables. In 2023, Nestle Malaysia Berhad had an account receivable turnover of 43.62 times, indicating high efficiency in collecting receivables. Fraser and Neef Holdings Berhad FNN had a turnover of 7.62 times and reflecting moderate efficiency compared to Nestle, potentially due to longer credit terms or slower collection processes. The third ratio, average collection period ACP, the method to calculate this value is account receivable divided by sales. FN Holdings Berhad had an average collection period ACP of 52.06 days, indicating a slower collection process for receivables. In contrast, Nestle Malaysia Berhad achieved an ACP of 9.11 days, reflecting more efficient receivable management. Nestle's shorter ACP demonstrate better liquidity and cash flow control compared to FNN. The fourth ratio, inventory turnover. We have to find inventory turnover by the method of using cost of goods sold divided by inventory. In 2023, FN Holdings Berhad had an inventory turnover of 3.69 times, reflecting moderate efficiency in managing inventory. Meanwhile, Nestle Malaysia Berhad achieved a turnover of 4.95 times, indicating better inventory management and faster stock turnover than FNN. The last ratio of activity ratio is fixed assets turnover. We can calculate the value by dividing the sales from fixed assets. The fixed asset turnover ratio demonstrates how efficiently a company utilizes its fixed assets to generate revenue. For FNN Holdings, the ratio recorded at 2.55 times in 2023, reflecting efficient use of its fixed assets to drive revenue. For Nestle Malaysia Berhad, the ratio was 4.12 times in 2023, slightly higher than FNN, indicating a comparable yet slightly better efficiency in leveraging fixed assets to generate revenue. Both companies showcase effective management of their resources in this regard. Now we can refer to the graph of activity ratio for both companies in this slide. First ratio under leverage ratio is debt ratio. The method to calculate debt ratio's value is total liabilities divided by total assets. The debt ratio is a measurement of a company's indebtedness in terms of total debts to total assets. In 2023, FN's debt ratio was 34.4%, reflecting moderate leverage and balanced financing. Nestle Malaysia Berhad debt ratio was significantly higher at 81.09%, indicating greater reliance on debt financing. FNN shows a conservative approach while Nestle employs a more aggressive leverage strategy. The next ratio is debt to equity ratio. To find the value, we have to divide total liabilities from common stock equity. Interpretation. In 2023, FN recorded a debt to equity ratio of 52.64%, reflecting a conservative and balanced financial approach with moderate reliance on debt. In contrast, Nestle's debt to equity ratio stood at a significantly higher 1082%, indicating a heavy reliance on debt to fund its operation or investments. This stark difference highlights FNN's cautious financial strategy compared to Nestle's more leveraged model. The last ratio in leverage ratio is times interest earned ratio. The formula of this ratio is EBIT divided by interest expense. In 2023, Fraser and Neff FNN as a ratio of 1.03 indicating limited ability to cover interest obligations, making it more vulnerable to interest rate risk. Nestle's debt ratio of 1.07 suggests higher financial leverage but doesn't directly show its ability to cover interest. A higher times interest earned ratio generally reflects better financial stability and lower loan default risk. So now we can refer to this graph which show the whole leverage ratio. Return on equity is a measure of company's profitability in relation to its stockholders' equity. To find the value of return on equity, divide earning after tax by common equity. FN's return on equity for 2023 is 16.21%, while for Nestle return on equity for the same year is remarkable 246.68%. Okay, from this, it is evident that Nestle achieved a significantly higher ratio in 2023, indicating a much stronger return to its shareholders compared to FNN. Next, return on asset (ROA) is a measure of a company's profitability in relation to its total assets. Formula to find the value: divide earning after tax by total assets. For the year 2023, Fraser and Neff Holdings Berhad (FNN) recorded a return on assets of 10.6%, while Nestle Malaysia Berhad achieved an ROA of 18.49%. This indicates that Nestle outperformed FNN in utilizing its assets to generate profits, showcasing a superior return on investment for Nestle compared to FNN. The gross profit margin illustrates how much of a company's sales revenue remains after all direct costs of doing business have been deducted. And to find the gross profit margin value, divide gross profit by sales. Fraser and Neff Holdings Berhad (FNN) achieved a gross profit margin of 28.69% in 2023, while Nestle Malaysia Berhad recorded a higher gross profit margin of 31.64% in the same year. In comparison, Nestle demonstrated a stronger gross profit margin, indicating a better contribution margin and operational efficiency than FNN in 2023. The operating margin is the profit made by a company operations before taxes and interest are deducted. The method to calculate the value is EBIT divided by sales. In 2023, FNN had an operating margin of 12.86%, while Nestle's was 13.36%. In comparison, Nestle had a larger operating margin, implying that its operation was somewhat more profitable and productive for the year. The last ratio of profitability ratio is net profit margin. The net profit margin is a key metric used to assess how profit a company generates from its revenue. To calculate the value, divide the net profit by sales. In 2023, FNN achieved a net profit margin of 10.84%, while Nestle recorded a slightly lower margin of 9.36%. This indicates that FNN was able to generate a higher proportion of profit from its sales compared to Nestle's in the same year. A higher net profit margin like FNN suggests a better profitability and more efficient cost management relative to Nestle. Now we can refer to the graph of profitability ratio for Fraser and Neff Holdings Berhad and Nestle Malaysia Berhad in 2023.
Summary of findings based on trend analysis part. The first company is Nestle Malaysia. Liquidity ratio is decreased. Activity is improved efficiency. Leverage is still highly geared. Profitability is stable with minor improvements. For the second company, FNN is liquidity is improved. Activity is mixed results. Leverage is worsened. And profitability is decreased but better margins. Suggestions to improve Nestle Malaysia Company. Manage cash better by getting payments faster and delaying supplier payments. Reduce borrowing to lower debt risk. Use technology to work faster and smarter. Launch new products to attract more customers. Train employees to improve their skills and productivity. The company that performs better is Nestle Malaysia. This is because in overall, Nestle Malaysia have Higher profits, improved efficiency and cost control in 2023. While for F&N company, stronger financial risk management in 2022 but lower profitability and efficiency. So, we can conclude that Nestle Malaysia performed better.
Hi, my name is Priyadarshini Anaprabhan Mahendra and my metric number is H2381643. I will present my part, which is summary of finding for comparative analysis. First of all, for the Nestle Malaysia Berhad, the liquidity is decreased and the activity is improved efficiently, particularly in asset utilization. For the leverage, still highlight generate indicating a more aggressive approaches. For the probability, stable with minor improvement in return on equity. Next, for the fronts and moves. The liquidity improved with higher current and quick ratio. For the activity, some operational area performing better but weaker asset utilization. For the leverage, the higher debt ratio and lower time interest, more conversation debt strategy. For the probability, decreased overall probability but better cost management reflect in a higher net profit. For the next, I will be continue with suggestion to improve funds and NIF. First one is focus on increasing the gross and operating profit margin by better controlling. The second one is reduce reliance debt financing to lower financial risk and improve financial stability. The third one is launch healthier premium and localized product to meet evaluating consumer preference. And the third one and the fourth one is streamline operation through supply chain, and the fifth one is invest in sustainable sourcing.
In conclusion, Fraser and Neff Holding BHD has established prevalence and adaptation in a challenging economy environment, commemorating its 140th anniversary with outstanding success in its food and beverages businesses. The company has effectively managed inflationary challenges and rising commodity price buying pressure, operation savings, smart acquisition, and expanding its products portfolio, particularly in the dairy sector. The company also, with dedication to sustainability and community participation, FN is well positioned to capitalize on synergy between its business segments, extend its halal food pillar, and improve its market presence both locally and worldwide. As its move forward, FN remains committed to providing quality products that fulfill the changing requirements of consumer while also contributing positively to social and the environment.